XRP's quiet power plays beyond the price chart. You know how every time crypto gets hyped, it's usually some meme coin with a cute dog blowing up overnight? Yeah, we've all been there, chasing those pumps, hoping to catch lightning in a bottle. But what if I told you the real money, the real future of crypto isn't in the noise? It's in the quiet giants, the projects that don't shout but actually build. Today, we're diving into why XRP and HBAR might just be the two tokens that lead the next big wave. Not with hype, but with serious, undeniable, real-world power moves. If you want to skip the drama and get straight to the substance that truly matters, this one's for you. Let's start with XRP. While many retail investors remain fixated on Bitcoin's ETF flows or Ethereum's gas fees, what's happening behind the scenes with Ripple and XRP is far more profound. Ripple's XRP isn't just moving in the charts anymore. It's moving in corporate boardrooms and institutional treasury strategies. Consider the major signal from financial players like Vivo Power, whose public filings revealed significant XRP treasury reserves. That isn't retail speculation or a short-term trade. That is long-term, strategic conviction from serious global players who see XRP not just as a token, but as a core liquidity instrument for their future operations, a hedge against foreign exchange volatility, and a tool for efficient capital management. We're also seeing massive, strategic on-chain movements that tell a story of their own. Just recently, a transaction of over $22 million worth of XRP was transferred. Critically, this wasn't a random wallet-to-wallet move. It was a strategically timed transfer between institutional-grade custody wallets, occurring just ahead of key announcements regarding Ripple's payment corridors in the APAC region. The broader market, conditioned to ignore anything but billion-dollar headlines, barely blinked. But the message for those paying attention was loud and clear. Smart money is aggressively accumulating and positioning while retail is asleep at the wheel, waiting for a signal that has already been given. Ripple continues its relentless expansion beyond just simple payments. Recent headlines might show their growing footprint in global finance, but that's just the surface. They've been quietly activating and scaling institutional liquidity corridors with major financial hubs in Asia, the Middle East, and Latin America. New partnerships aren't just being announced for PR hype. They're being implemented and are handling real, measurable volume. Ripple's strategic acquisition of Medico, a leader in institutional digital asset custody, was one of the most significant yet underappreciated moves in crypto. It wasn't a flashy stunt. It was a deliberate, strategic masterstroke to provide the picks and shovels for the institutional gold rush. It allows regulated banks and financial institutions to hold, manage, and transact with XRP as part of sophisticated tokenized portfolios, directly within their existing, battle-tested compliance frameworks. It removes a massive barrier to entry for conservative capital. Even more under the radar, Ripple's integration into regulated financial infrastructures is starting to mirror the early days of what Swift accomplished decades ago. Only Ripple is building it to be infinitely faster, cheaper, and fully programmable. With the regulatory clouds now cleared after the landmark SEC settlement, major financial institutions are no longer just watching Ripple. They are actively testing, deploying, and integrating its technology at an accelerating pace. The recent, quiet partnerships and pilot programs with entities linked to the Bank for International Settlements, BIS, and various cross-border payment trials in emerging economies point to a much larger, more ambitious game. XRP is methodically becoming the silent, compliant settlement layer beneath the movement of regulated digital assets. While everyone else is distracted by meme rallies and the promises of AI hype coins, XRP is becoming deeply embedded where it matters most, in the very infrastructure of tomorrow's global financial system. And when that switch flips from pilot program to full production across dozens of banks and central banks, the ripple effect will be impossible for anyone to ignore. XRP technical signals the coiled spring before the breakout. Right now, as of June 2025, XRP is consolidating in the $2.19 to $2.30 range. But don't let that apparent stability fool you into thinking it's just drifting. There is serious, palpable tension building underneath the surface of the charts. Think of it less like a calm sea and more like a tightly coiled spring, compressed with immense potential energy, ready to unleash. The support levels are holding with a strength and consistency we haven't seen before, almost like a pressure cooker systematically building steam, waiting for the valve to blow. Analysts are now zeroing in on a key resistance zone between the $2.75 mark and the massive psychological barrier at $3. If XRP can decisively punch through that wall with significant volume confirmation, we could see a cascade of technical buy orders and short liquidations that could make dominoes start to fall fast, propelling prices toward the initial target of $5 and beyond. This isn't your typical hype-driven pump or an emotional, retail-led roller coaster. We are talking about classic, textbook technical signals converging with a backdrop of stealthy, off-exchange accumulation. The chart pattern is screaming higher lows, a tightening consolidation wedge, and a clear, verifiable drop in sell-side volume. XRP isn't just barely hanging on. It's coiling up for a serious, technically justified breakout. Let's look at the futures market. Open interest is steadily on the rise, meaning more traders and institutions are placing bets, some with significant leverage, in anticipation of a major directional move. This isn't just retail gambling. It's a sign of sophisticated players positioning for volatility expansion. When open interest climbs steadily alongside low price volatility and quietly growing on-chain volume, you are looking at a classic, textbook setup for a massive price expansion event. It indicates that big players are setting their positions before the volatility hits. The timing is also crucial here. XRP's price action has historically shown a fascinating correlation with broader macro liquidity cycles. With global liquidity conditions slowly but surely loosening and risk-on sentiment cautiously creeping back into the markets after a period of tightening, XRP is sitting on a launchpad, fully compliant and waiting for its catalyst. Now, look at the Daily Relative Strength Index, RSI. It's quietly trending upward but has not yet hit the overbought territory. That's a subtle but incredibly powerful signal. It shows that smart money is creeping in, accumulating methodically, while the broader retail market is still on the sidelines, waiting for a more obvious signal. Market makers aren't scrambling to chase this yet, but they are watching and quietly absorbing supply. The floor is being solidified. Now the ceiling is the next logical target. The Bollinger Bands on the weekly chart have been tightening for weeks. This squeeze signifies that volatility is massively compressed, a condition that, in over 80% of historical cases, precedes a significant breakout. History backs this up. Every single time XRP has entered this kind of prolonged squeeze, it has been followed by a sharp, often near-vertical rally. That's not luck. It's market physics. It was driven by utility gains and institutional traction bleeding into price action. Today, that same technical setup is back. But the fundamental case backing XRP, thanks to regulatory clarity, is exponentially stronger. This is the setup that technical traders dream of. BAR's silence isn't weakness, it's strategic positioning. HBAR has quietly slipped under most retail radars, trading around the 17-cent mark, while speculative futures volume has steadily declined. At first glance, for the untrained eye, that looks like a sign of weakness, a token losing momentum, fading into obscurity. But if you zoom out, if you take a broader, more institutional view, what you see isn't a crash. It's not capitulation. It is a clearing of the noise. The speculative, short-term traders who chase quick flips and social media hype cycles, they've largely moved on. What remains is pure signal. Deliberate, patient, and methodical accumulation by institutions that actually understand what Hedera is building, why its technology is unique, and why its governance model is its secret weapon. This isn't a price collapse. It's a narrative reset. When volume dries up in speculative meme coins, it's usually the beginning of the end. But when it happens in a protocol with deep enterprise roots, a unique tech stack like the Hashgraph consensus, and a governing council that reads like a list of Fortune 500 companies, it often signals the start of a strategic repositioning. The players holding HBAR now aren't here for a quick 2x pump. They are here to own the rails before the global enterprise train leaves the station, and that means playing the long strategic game. That drop in speculative volume isn't bearish, it's surgical. Hedera is quietly pushing out the noise traders and clearing the decks for infrastructure-level players. We're not talking about individual wallets hunting for the next weekend pump. We're talking about multinational corporations, governments, and global consortia integrating Web3 technology into real-world, high-stakes operations. The significant shift in BAR's volume isn't found on retail exchange order books. It's happening in off-exchange private deals, node operator agreements, and large-scale enterprise deployments. These integrations don't flash on retail volume charts, but they are the very backbone of future, sustainable adoption. HBAR isn't trying to ride the meme coin wave or ignite short-term FOMO. It's building something fundamentally different. A permissioned, enterprise-grade Layer 1 network designed for unparalleled performance, ironclad regulatory compliance, and sustainable long-term viability. Look no further than the Hedera Governing Council, a lineup of global enterprise titans including Google, IBM, Boeing, Dell, LG, Standard Bank, Ubisoft, and more. These aren't just PR partnerships to pump the price. These are active, invested stakeholders running validator nodes, shaping the network's governance, and, most importantly, deploying the technology in critical, real-world use cases across dozens of industries. The underlying tech, the Hashgraph consensus algorithm, is an absolute beast. It provides asynchronous Byzantine fault tolerance, ABFT, the highest possible level of security for a distributed ledger. This results in ultra-low latency and transaction finality in mere seconds, not minutes or hours. This level of performance isn't just impressive on paper. It is essential for serious enterprise applications. Whether you're tokenizing trillions of dollars in real-world assets, managing complex, compliant supply chains for pharmaceuticals, or executing millions of microtransactions daily with legal oversight, speed, security, and reliability aren't optional. They are absolutely critical. This is what institutions pay for. Behind the scenes, smart money knows what's happening. The Hedera Foundation's silent expansions into highly regulated jurisdictions and its focus on enterprise-grade use cases like the Guardian platform for ESG data reveal a strategic positioning that flies completely under the retail radar. This isn't weakness. It's strategic silence. Why XRP and HBAR could lead the next wave. As global regulators tighten the screws on purely speculative assets and crack down on the reckless cryptomania of past cycles, one thing is becoming crystal clear. The next bull cycle, the one driven by institutional capital, won't be about hype tokens or viral pumps. It will be dominated by projects with real-world utility, robust compliance frameworks, and deep institutional alignment. And right now, in June 2025, XRP and HBAR are not just ahead of that curve, they are actively paving the way. Both XRP and HBAR share crucial traits that set them apart from the vast sea of speculative altcoins. They have compliance baked into their DNA, they possess scalable technology capable of supporting massive transactional throughput, and they are being adopted by serious, global organizations that don't chase hype cycles. They operate on long-term vision and strategic necessity. This is why XRP's price moves with a controlled, institutional feel, and why BAR's growth looks so deliberate and measured. This isn't retail-driven FOMO. It is infrastructure-driven, foundational building. Look at XRP. It's not just a crypto token. It's the fuel powering real-time, low-cost settlements across global payment corridors, reducing friction and freeing up trillions in trapped capital where traditional finance has struggled for decades. From cross-border remittances in Southeast Asia to tokenized real estate pilots in Europe and commodity trading in the Middle East, XRP is quietly moving billions, facilitating liquidity where it's desperately needed. With the SEC settlement providing a clear path forward in the US, these aren't just speculative use cases anymore. They are live, expanding deployments with active partners driving genuine, measurable utility. Meanwhile, HBAR is quietly running government-backed public registries, enabling verifiable ESG data tracking for major corporations, and powering permissioned enterprise chains that demand the absolute highest standards of security, performance, and compliance. Hedera's enterprise-grade architecture is unlocking new possibilities in heavily regulated sectors like supply chain logistics, healthcare data management, and the burgeoning carbon credit markets. It is methodically tackling trillion-dollar industries, not by chasing headlines, but by earning institutional trust through performance and governance. This focus on verifiable data and auditable transactions is precisely what the next phase of enterprise blockchain demands. This is the kind of foundational work that doesn't grab daily headlines or generate viral social media buzz, but it is what moves markets over the long term. The stage is being set for a massive rotation in crypto capital flows, a rotation away from noise-driven speculation and into networks that are actually solving the real-world problems that institutional investors, corporations, and regulators deeply care about. As regulatory clarity becomes the new norm, projects like XRP and HBAR won't just survive. They'll thrive. Not in spite of regulation, but because of it. Their compliance-first approach and enterprise-ready governance models mean they are already aligned with the rules that institutions are mandated to follow. That puts them in the prime position when traditional finance finally embraces tokenization at scale. When the next wave hits, and it's coming, the race won't be about who can shout the loudest on social media. It will be about which networks can actually deliver on their promises of security, scalability, and compliance. XRP is becoming the backbone of global liquidity networks. HBAR is laying the secure, trusted rails for the next phase of tokenized business, sustainable finance, and compliant digital assets. Both are quietly preparing for that moment. The only question now is, are you paying attention before the explosion? The great rotation and the investor's edge. What we are witnessing in mid-2025 is the beginning of a profound market event. The great rotation. This isn't just a minor shift in sentiment. It's a structural migration of capital, attention, and developer talent away from purely speculative, hype-driven narratives and towards projects with demonstrable, real-world utility and a clear path to regulatory compliance. This is the moment where the market begins to mature, where potential is no longer enough and proof becomes the new standard. And at the forefront of this rotation are the quiet giants, XRP and HBAR. For years, the crypto market has been dominated by cycles of hype, from ICOs to DeFi summer to NFTs to meme coins. While fortunes were made and lost in that casino, a different kind of value was being quietly built in the background. Now, as institutional capital cautiously but definitively enters the space, it isn't looking for the next dog-themed token. It is looking for infrastructure. It is looking for rails. It is looking for projects that can solve multi-trillion-dollar problems in global finance, supply chain, and data management. It is looking for projects that have spent years navigating the complexities of regulation, not avoiding them. In short, institutional money is looking for XRP and HBAR. This rotation provides a massive investor's edge for those who can see it happening. While the majority of retail participants may still be chasing the last echoes of the old hype cycles, the real opportunity lies in positioning oneself in the assets that institutions will be buying for the next 5 to 10 years. XRP, with its legal clarity in the US and deep inroads into global banking, is poised to capture a significant share of the cross-border settlement and liquidity market. HBAR, with its unmatched performance, security, and corporate governance model, is positioned to become the default enterprise-grade ledger for tokenized assets and secure data applications. The secret isn't a secret at all. It's simply about looking where the real work is being done. The quietness of XRP's institutional partnerships and BAR's enterprise deployments isn't a sign of weakness. It's a sign of professional execution. These deals are forged in boardrooms, not on social media. The value they create is measured in transactional volume and efficiency gains, not in trending hashtags. This is the critical juncture. The market is bifurcating into two distinct worlds, the world of speculative entertainment and the world of foundational infrastructure. As the great rotation continues, we anticipate a significant repricing of assets based not on their hype, but on their utility. XRP and HBAR aren't just making noise, they're making moves. And as always, those quiet, strategic moves tend to be the most profitable in the long run. The time to pay attention is now, before the rotation is complete, and before the quiet giants begin to roar.